All right, all right, all right. We are live. We are live. We are live. We are live. Live, 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 live. Alrighty, guys. So, welcome to today's session today. I'm really excited to bring you a bit of a market update and a few things that's happening around the world. And we're looking at the stock market and all that down home country goodness today. Alrighty, guys. So, on the world. Let me just make sure everything's working on my end. Yep, everything seems to be working all good on my end. We talk about the stock market today, guys, and also looking at silver and gold again too, to see what's happening with that. Crypto, and to see what's happening with that based on, based on what's happening with the market right now. So let me. Why is that doing that for? Okay, cool. So, the overall market today, guys, just nothing will stop this market, and it's something that is really really important that I've noticed throughout my trading career is that you never want, once you define when there's a trend in place, you never want to fight that trend, or you never want to fight what's going on with that market there, with what's going on there. So you never ever want to do that. So before I do start, guys, let me get straight into the typical disclaimer. I want to start off with a disclaimer, and let's get straight into it. Guys, do not place a trade based on what you're seeing in this session today, because trading is risky and it can cause substantial financial loss. There's no guarantees of making money in the market. You've got to be smart about the way that you are trading. Good trade management, good trade selection, all that sort of stuff goes into becoming a really, really good trader. Okay. Now, guys, I've just added to the Master Trader Lab, I've just added the Blast Off trading system. So if you're looking for a really good trading system that works on any market and any time frame, that can give you like a 5-to-1 risk to reward ratio, or reward to risk ratio, then I've actually added that to the Master Trader Lab, and you can get a free trial to the Master Trader Lab at mastertraderlab.com. And you can grab and you get access to everything else, all the different courses that's in the Master Trader Lab. So if you are interested in that and you're interested in the Blast Off trading system, you get a free trial to it. Test it out for free. You're not happy, let me know, and you'll never be billed. Alrighty, guys. So one thing I want to talk about in today's session is the stock market. And the thing that's happening with the stock market is, like, we're not at the top yet. We're not at that point of where the market is likely to tip over, not just yet. And the reason why I say that is because we're not getting any real significant sell-off, or any significant point where the market's likely to turn. And so that the people that have been trying to fight this market for quite some time, like I know people that started to short the market back here in March, and they've just been hurting all this time. So by looking at what's happening here, this is where, like, whenever you define where the trend is, if you see the last 3 months, the trend has been going up, trying to fight that trend is very, very, very risky. All right. It's very risky. So you always want to be going with that trend. And so you can see there on the S&P, you can see here on the S&P 500, or there's no volume there. The Dow Jones is not at new highs, not yet anyway. And the NASDAQ, what's happening with the NASDAQ is the actual NASDAQ itself, right? Which is really interesting. So that's that there. But the QQQ has actually broken past, like completely broken past its new highs, and now we're at all-time new highs on the NASDAQ, which is really interesting, right? And that's why I always say, like, if you look at here, the QQQs, NASDAQ is all at all-time new highs. The thing is, if you look at a stock like Apple, and Apple's not at new highs, not yet anyway. So it's really interesting to see what's going on here with the actual market itself. So we we could be getting ready for a bit of a blow off top here, because I do believe over the next, say, 12 months, we're going to form a bit of a top in the markets, where we are right now in the overall big picture of things. So right now, guys, I definitely wouldn't want to be trying to fight this market. And for you guys that have been watching me for quite some time, right, you know that I've been saying, and I've been trying to tell people not to fight this market and so on and so forth. And I know some people also been trying to buy the TVIX as well too. Like they just bought the TVIX because they're like, I had one guy come in and said, John, I'm all in. I think it was like 30 grand or something. I'm all in on the TVIX right now. And it just goes down and down and down and down and down. Only because they fail to recognize one thing, and that is that if the market is going up, if the market is trending up, don't try and fight that market, because more times than not, you're going to get your head handed to you. So right now we can see like and like that there, and also the actual VIX itself as well too. Like the VIX is back down to the ultra low levels. Trying to play the VIX as well too, guys. I used to do that, by the way. I used to try to play the VIX, meaning buy options on the VIX. There's one big problem with that. You only can buy 6 months out when trading the VIX options, and trying to get even a little bit of a spike out of it. It might, like, it's, you know, you may get it, you may not. It's just it's not a very good strategy. So if you guys are looking at trading the VIX options, it's not a very good. It's not a very good strategy to do that. So not right now anyway. I do believe over the next 12 months, we're going to start to form a bit of a top in the markets. And and it's really interesting, guys. This is how I'm seeing things shifting in the markets over the next, say, 12 months. What I say over the next 12 months is that we're likely to go through a bit of a blow off top, like a one last leg push to the upside in the stock market, Dow Jones, NASDAQ, so on and so forth. Then from that, if I go to, actually, if I bring up this here, let me just bring up this one right here so you can see all my charts. So what I see happening is that the stock market goes for one last push, and that's what's happening right now, right? It's just gone for one last push to the upside. And then what happens basically over the next, say, 12 months, basically, yeah, over the next 12 months or so, we're likely to start seeing a lot of shifts in the markets, and that's when we're likely to start see things starting to shift, where gold and silver are likely to go through a big run. The dollar is likely to start to pull back, and the stock market's likely to pull back at the exact same time. But you can just see the picture that's happening right now. Stock market is a rampage. Trying to go against the market right now is not a good idea. So right now, guys, as I said before, like trying to go against this overall big picture here right now on the stock market is not a good idea. I actually have a target of 29,000 on the Dow, where I think it's going to get to ultimately before, and again, guys, be prepared for vertical action. What I mean by that is be prepared. Like what we got back here in 2018, be prepared for something like that to happen soon. And when that happens, you better believe we're in the final top of this bubble. Now, what I mean by that is, as you can see, this is what's happening right now. So as you can see the whole thing playing out right now, because we're in the final top of this bubble. Over the next 6 months or so, we're likely to go through another big run in the markets. And we're likely to go vertical. Now, vertical simply means that it goes pretty much straight up. It doesn't go straight up one day. I mean, just one bar, right? It's over a few weeks and a few months that pretty much majority of the bars are continuing up. Goes up for a week, sideways for a few days, up for a week, sideways for a few days. As you can see back here, that's what we're likely to see once we start breaking above the 27,000 on the Dow. We're likely to see a 29,000 Dow. So that's what we're seeing there right now. Now, the interesting thing is, guys, is about the actual stock market. For you guys that have been following me, I've been saying get ready for a nice move in the dollar. Now, guys, give me a yes in the chat. Give me a yes in that chat box if you've seen some of my videos over the last month or so, where I say that the UUP is actually looking like it's about to go for a nice run. We're just waiting for a nice breakout there, because that's what we're getting right now. We're getting a nice strong breakout on this UUP here, and it does look like we're about to go for for a bit of at least a bit of a run back up, and we're slowly starting to break out now. So I see at least a 2 or 3% run in the UUP, which is the US dollar. We're still slightly breaking out here, which makes sense, and which is making sense right now as well too. So I see the US dollar making a nice move, like making a really, really nice move in that there. I know I'm looking at the UUP here, guys, but that's the only thing I can't actually use. I can't actually see the US dollar on this chart for some reason. So that's what's happening there right now, guys. And so I ultimately see the ultimate target is probably 28 on the UUP. Probably first target is 27. Then once it breaks that just below 27, then we're on our way up to 28. But I do see probably a nice move breaking to the upside, and we're likely to start seeing some strong movement in that dollar, which is probably going to put some pressure on the metals at the exact same time. So as that's happening, as that's forming, then probably towards the end of this year, we're likely to start seeing a lot of bullish activity happening in the metals. And like I was saying in yesterday's live stream, that if we go back and have a look at the silver and come on now, be nice to me. But all right, cool. Right. As I was saying in yesterday's session, that if we do start to get a hold here in the silver, this is the silver chart here, and the actual gold, if we get a bit of a hold here, then we could be forming over the next few months. We could be forming a bit of a basing pattern, and then we're like, and then we break out, which makes sense, right? Because if say towards the end of this year, that's when we're gonna start to form a lot of weakness going into next year, then it makes sense to see the gold is probably going to start to go for a run maybe 6 months prior to that actually happening. So, spit it out, John. Maybe it won't. But what I'm looking at there right now is exactly that. So I'm going to really, really keep an eye on this this gold here, because if we start to really hold here and start to rally up and out, it's going to be real. It's on like Donkey Kong for silver and gold. So over the next couple of years, you can really see what's likely to happen. Stock market's likely to go through a blow off top. US dollars are likely to go for another run as well too. Put a bit of pressure on the metals. Then from that, we're likely to see, because of all this debt that's actually happening in as well too, the US dollars. Then from then, we're likely to start seeing a weakness in the US dollar, a weakness in the stock market, and then we're going to see a flood into things like gold and silver, and possibly even some of the crypto market at that time as well too, but not right now. Not right now. If anything, we're likely to see a bit of pressure on the metals right now because of what's likely to happen moving forward with that. So that's the fundamental basis, but I always make my decision based on a technical and based on what's actually happening with the markets there. So, so that's basically what's happening through there. Looking through the actual the SIL and SILJ, still seeing just a ton of weakness in the actual silver miners here. So trying to go against this here, trying to buy the silver miners right now is a very, very risky strategy. The SILJ is almost at my target, which was at $7.75 there. The GDX, the GDX is almost at my first target as well too, which is that 2050 level there. And the GDXJ, my first level target there was around where it is right now, and then the next level target is down there around 26. So really, it's really interesting to see what's happening here, guys. And I'm telling you right now, like I'm keeping my powder dry. And one thing I strongly recommend you doing as well too is be patient. Be patient, be patient, be patient, be infinitely patient with what's actually happening right now. Be infinitely patient. Keep your powder dry. Don't be throwing your money at just shit in the markets, because it's not worth it right now. If you're unsure, if you're not getting any clear signals from the way you trade and the ways of that, Don't take anything. I would rather you wait 6 months and wait for a perfect opportunity to have a 12 to 2 or 3 year position in gold and wait for that one opportunity over the next 6 months. And that's the only trade you take, then trying to get in and out for the next 6 months and probably blowing up your trading account. Okay. Please, please, please. Right now is not the time to try to get in, get out. That's that's what they're now. If you are looking to invest in the metal like silver and gold long term, so you say, oh, I'm buying it right now. I don't care what happens over the next 1 or 2 or 3 or 6 months. It may continue down. I don't really care about that. All I care about is where it is 5 years from now, and we're likely to see a big bull run other way. Cool, fantastic. But if you're looking to position yourself to benefit from the next move up, now is not the right time, okay? So please, please, please be infinitely patient with this markets. Wait for good quality setups. Get in as hard as you can and get out as hard as you can. Like just recently, guys, someone asked me, I said at the start of I think it was last week, that I got into a trade, and someone said, what was that trade that I got into? Well, I actually can tell you the trade. I actually can tell you the trade that I got into, and it was this one right here. Right. And so I was in and out as quick as you can look at me, and, and this one here, the options did not close to a 90% return on this trade here. So I can actually tell you now, because I'm out of this trade right now. I got in on this breakout candle, and I was only in it for a couple of days, so it wasn't a big move, but my options took off like crazy, almost 90%. I'm like, I'm done with that. Thank you. And so that's what I'm looking for. I'm looking for clean setups that can give me a really, really, really nice setup there. So please, guys, please, if you're trading the markets, you need to be in and just moving and just making sure that you're waiting for these good quality setups. Get into it as quickly as possible, getting out of it. Stop not trying to hold on for big profits and all that sort of stuff. It's not about that. Well, I shouldn't say not big profits, right? If you had, for example, 10 grand on this trade here, you would have made close to a $9,000 profit, in 2 days. Or even just yesterday, if you got out yesterday, you'd have made about an $8,500 profit. The point I'm trying to make here, guys, is someone actually asked me, what was that trade that I got into a couple of days ago? Because I couldn't tell you that I was in it, but I can tell you now that I'm out of it. But the whole thing is this, guys. The whole thing is, please, 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 please. I'm trying to tell you that even myself, I am not an active trader, right? I will wait as long as I have to. I'll wait 1 week, 2 weeks, 3 weeks, 4 weeks until that opportunity comes. And then when that opportunity comes, when I'm trading the markets, when I'm getting into the markets, I will get in as hard as I can with good risk management and get out of it as quick as I can. Because, guys, right now is not the time. Right now is not the time to be trying to pick tops and pick bottoms and gambling with your money. Right now is the time to be on the sidelines and just be infinitely patient. The most successful traders or investors in the world, guess what they do? That every day they're doing analysis, and waiting and waiting and waiting and waiting and waiting and waiting and waiting. And then bam, they wait, that they see a really good quality setup, they get in, they get out really, really quickly. So for example, like on this setup here, on the breakout candle, I got in on the breakout candle because it met my rules, and I held it for a couple of days, and then I was out. I was actually out this morning on this trade here. So, guys, and like, again, if it was a $20,000 position you put on here, you're now looking at, close to an $18,000 profit in a couple of days. It's like, but who cares about the number? What I'm trying to show you guys is that when you build confidence in your system, you can really, really, really start to do well. But it all comes back down to whether you're investing in silver and gold, or you want to buy some mining stocks or whatever. Please wait for a good opportunity. Don't try and predict the market. Wait for the chart or the market to actually tell you what's going on in the markets. Okay, it is so important to do that, and not be greedy. All right, so and a reason why I'm harping on this, guys, because I see so many people that are getting chewed up, and the most successful traders. My very first 7-figure mentor, he said the exact same thing. John, I'll wait as long as I have to until I get that signal, that a really good entry signal. And there's nothing about this trade that says not to get involved with this thing, because it's not good enough. That's how he has the ability to place $100,000 position in the markets, trading using options. my very first 7-figure mentor. But he'll wait as long as he has to. He'll wait weeks and weeks and weeks until that one really good setup. He'll pounce it hard as he can. Oh, good for him, John. He can place a 100 grand trading account. He's a 7-figure trader. BS. It wasn't that long ago. It wasn't that long ago that he blew his first 3 trading accounts up with $5,000 each in it. And then he come back with 5 grand, and then he figured it out, and then he started to move forward in a big way. And then I have another mentor who also trades the Forex and the futures markets. Pretty much the Forex and futures markets. He watches the intraday charts, and he'll sit there for 12 hours a night watching all these markets and not take a trade for a whole week because it's just not right. But guess what? When he's getting in the market, he's getting in like, 50, 100 contracts, 50, 100 grand at a time. So to make 10, 20, 30 grand in a matter of minutes on a trade is quite simple and quite easy once you know exactly what to wait for. Again, good for him, John. He's trading 100 grand a trade. But how do you think he actually got there? You could take a really, really, really bad trader with a $100,000 trading account and blow it up. You can take a really good trader with a $5,000 trading account, and in 3 or 4 years time frame, you're a 7-figure trader yourself. Which means 7-figure trader simply means you make more than 7 figures per year, which is only 80 grand a month when you think about it. Now, what is that? Say, for example, in this trade here, I'm just using my recent trade because this is a recent example here. If you had $50,000 on this trade here, or 100 grand on this position here, if I had $100,000 on this trade, what was my risk? My risk was my risk, because it was an option trade, really is $100,000. But really, I'm risking only maybe 30 grand, maybe 30%, because it was in the money option, so on and so forth. But what ended up happening? This thing ran on to almost 90%. That one trade from there to there, with the correct position sizing, would have made $80,000 to $90,000 in one trade in a few days, just by waiting for that. But also understand, knowing I'm going to have roughly maybe a $30,000 risk on this trade if he does go against me, it's out for a loss. So it's not the entire position. But I'm trying to get you guys thinking bigger about how do you think these guys. There was a guy a while ago who turned a $20,000 trading account into $2 million. I think it's about like three or 4 years time frame. How the hell did he do that? Every day he was researching and looking and studying. And when he found something that was almost a sure bet, like this has no other choice but to move up, to go sky high, guess what? He was pretty much all in. And then he held it for quite some time and made a killing out of that. So please, guys, if you are trading this market right now, keep your powder dry. Don't be trying to force this market. Don't be trying to rush this market. Don't be trying to get in and get out and all that sort of stuff. If you are not 100% confident about the position sizes about the trade you're getting into, or the position size you're getting into, then don't do it. The trade you get into, you must say, I'm 100% confident in this position here. Not, well, I'm going to try this out to see if it works, because that's total BS in the markets. If you're doing that, you're gambling, and you're going to keep getting your ass handed to you. I guarantee it. And then the correct position sizes, because you got to have the correct position sizes, which simply means if this is a losing trade, then I'm not going, my overall count's not going to be affected too much. And I'm okay with the risk on this trade. You've got to be at that so you can remove the emotions and then just allow the market to do what it needs to do. I guarantee you, when you do that, and you're not trying to be right with the markets, you're not trying to make money on every single trade, because you can't. But if you have a system that's a 70% win-loss ratio, I guarantee you can take a 70% win-loss ratio and completely turn it into a 70% loss ratio. And the reason why is because now you may have a good system, but now you're picking and choosing which one you think is going to be a good trade. I have no idea, right? I have no idea about which trade is going to generate a profit for me with my trading system. Now, I do know most of the trades run on for really good profits. When I'm trading options, the one thing I love is I have a 90+% success rate with that. So when I'm trading options, I'm going to have maybe a 30, maybe a 40% loss there on those losing trades. That's 40% is quite a high point there. And the profits are 50, 100%, 100, 150%, sometimes even 200% profits. So all I have to do is keep waiting for those trades. And I guarantee you, if you look at your trading like that, I guarantee you, I can trade only 1 or 2 dozen times per year, trading half an hour on the stock market using options. And I will probably clean up most traders who are getting in, getting out, getting in, getting out, getting in, getting out. I could trade only a dozen times throughout the entire year and probably clean most people in percentage terms on your trading account. Because the number one key amongst all successful investors or traders, guess what? They research. Like, what does Warren Buffett do? He will research and research and research and research and research and research a company for years sometimes. And then when it's the right time, he'll get in and he'll never sell. Now, it doesn't mean that every single investment that he's made has been a good investment. No, but majority of it has. That's why he's at where he's at right now. So please, guys, take that mentality into your own investing, into your own trading, into the way that you're looking at these markets here. Yeah, it's so important that. So that's where you really start with that foundational basis there, guys. The foundational basis is you've got to understand exactly what are you looking for in a good quality setup. Because if you don't have that, you have shit. You have nothing. Because it's not about being lucky with the markets. It's about having a good quality setup with the correct position sizes. So if it is a losing trade, you're good. You're okay with that. Therefore, you're not going to pick and choose which trade you think is going to be a good trade, all that sort of stuff, and then away you go. So you can do really, really, really well with this, guys. The one biggest problem that I see, and one thing I'm harping on about today, is patience. Be patient, be patient, be patient, be patient, be patient, be patient. Because I'm telling you right now, you can have a 5 or 10 grand trading account, and when you see that correct trade that you're looking for, and it's just like it's all there, man, you can before you know it, you can scream. We can scream even with that trading out. Because once again, guys, you can take a really crap trader with $100,000 trading account and blow it up. You can take a really good trader with a $5,000 trading account, and it'll take time, but before you know it, in 4 or 5 years time frame, that $5,000 trading account has now created him to be a 7-figure trader, which means he makes more than $1 million a year from that 5,000. How does he do that? It's all about the discipline. It's never about the money. So just give me a sec, guys. Give me 1 sec. All righty, traders. So one of the biggest problems that I do see also with most traders out there, and I've experienced as well too, is that they think it's the instrument that's going to make them money in the markets. They think it's buying options, it's selling options, it's doing covered calls, it's trading ETFs, it's short-term trading, it's penny stock trading, it's forex trading, it's forex scalping system, it's forex long-term trading, it's the futures trading, it's it's divergence trading, right? It's never the market that you have to worry about, because a lot of people say, well, options didn't work for me. No. That's total BS. Because I'm telling you right now, if you get good at picking good quality setups that are likely to move in your favor, buying options and buying obviously the correct option, you're going to do well. Oh, John, you know what? I used to sell options and I used to sell put options, and in a bull market, I did so well for 6 months, but then one bad month wiped all that profit out. Options don't work for me. It's not the instrument that you have to worry about. It's like, how you trade the markets. Options are a phenomenal tool. I love trading options. Now, for me, I buy options only. I don't sell options at this point in time anyway. I may do later on, but I don't do any selling of options. Oh, John, you know what? I tried the Forex market and it just didn't work for me. Um, so you know what? I tried the Forex market. It's never the market, guys, okay? Because you want to understand, and Savage, you're part of my coaching program, so you can back this up. Once you've got a very good simple charting pattern, a trade setup that is a very high probability setup, you can trade a 2-minute chart on a Forex market, an hourly, a 15-minute chart on a futures chart or a stock chart or what it is. It's the same pattern. And Savage, again, because you're part of my coaching program, you see it, right? You see the setups on a 2-minute chart, a 15-minute chart, a daily chart. It's all the same thing. So it's never the market you have to worry about. It's like, how are you trading? Because every single market operates the same way. You just got to wait for that one particular setup and then just trade it. And that's where a lot of people with my coaching program, a lot of people say like, wow, John, like this is not a stock trading system. This is not a future trading. Like, no, it's a trading system that works across other markets because it's just a setup. And it's not like the Forex market works differently than the stock market. They all operate the same way. So anyway, guys, I'll get into some questions now. If you haven't done so, if you are looking for a good trading system that you can at least start following, then grab my Blast Off trading system. I think you're going to absolutely love this. Actually, I know you're going to love it. I've just recently added that to the Master Trader Lab, and I've added this Blast Off system to all the other trading courses, and I'm giving away a free trial to that. You can get a free trial to the Master Trader Lab at mastertraderlab.com. What I want to do right now, guys, is I want to just go through some Q&A right now. I'll go through the questions. Indices going towards a sharp angle up is trouble. Indices going towards a sharp angle up is trouble. If that does happen there, then that's definitely in bubble territory. It's probably the blow off top there. Approximately when the gold will shift up. Well, no one knows exactly when, crypto. That's where you got to just keep watching the market, keep watching the charts. The charts will tell you when there's starting to be buys coming in. If you haven't seen my session, my live stream that I did yesterday, go back and watch that, and you'll be able to see exactly what I'm talking about there. The market will start to tell you when the buys are starting to come in on that market there. John, if we draw a trend line to connect the Dow Jones top, is it considered strong resistance? Not yet, anyway. There is the exact high, or there is a resistance through here, like that point through there. It could be resistance, it could not be. So yeah, not sure. But again, it could be though. Let's go through here. Stock rally with RSI way overbought on low volume. That's okay, Money Maven. The problem with indicators, Money Maven, is that because that's happening, you think, therefore, we're likely to sell off. The problem with trading with RSI, and I used to trade with the RSI. I used to trade with the stochastics. And I used to think the same thing. The problem with those is those things can stay in overbought or oversold, or what can happen with those indicators is it may be overbought right now. We go sideways for a few days, not even have pullback. The RSI has a massive dip down into the oversold section, or drop down into the middle section, or down to say 30, and then the market picks back up again, and so does the RSI. So that's not a very good indicator. The RSI, it's not a very good indicator to do that. I do agree by you looking at it with divergence, but if you're going to trade divergence, trade it with the overall trend. So if you see an upward trend, then you see a pullback with that overall trend, and then you see divergence coming into it, and you're looking to buy into that overall upward trend. That's what to do. But don't be trying to trade divergence against the trend. That's the worst thing you can do. That and the same as stochastics. I think really good clean divergence signals work. But it's just not for me anyway. Personally, I'm looking just, and you don't need to have that anyway. A blow off top makes sense. Maybe we break highs and get a pullback to build energy before a big run. Maybe we'll have to wait and see, won't we? JDST being good for a month. JDST. Oh yeah, well that's obviously the reverse. That's the reverse to what's actually happening right now. But you know, we did just create a lower low through here, so this could create some sort of lower high through here. Actually, you know what? That actually could become that could be some sort of false breakout there. Bit of a bottoming pattern, and then maybe a run up. So it'd be really interesting to see whether we do get, because there's a lot of resistance around that level there, whether we do get a lower high and then roll back down, or we actually hold here and we start to build a lot of strength. If we start to build a lot of strength here, then that could be a false breakout, and then we could see a move up there. But we're still trending down. We have just broken out. We're still trending down. So yeah, that's very, very difficult to see that there. But pretty much nothing happening for the last couple of years, really. But when we do start the break, we're likely to see a nice break up there. Nice one on ADTN. Yeah, Savage, yeah. John, do you normally buy in the money, at the money, or out of the money options, and how much out of the money? Tamara, that's the wrong question you should ask. You should be asking, what's my trading system? Because if you trade, no, firstly, I always trade in the money options. Always trade in the money options. So that's there. But Tamara, even with that information I told you, if you don't have a good consistent setup that you're following every time, then that information is going to mean nothing to you. It's not, oh, okay, I've been trading out of the money options. Maybe I need to start trading in the money options. That's the thing that's going to make me money. Wow. Hello, John. Can I ask what you think about Twitter? Twitter's actually on my watch list today. Twitter right now. Savage said Twitter looks like it's going to come back down, in my opinion. No. Right now, we've actually been, if you look at what the market is doing, look at this here. All right. So pretty much sideways for, geez, how many months is that? It's been pretty much sideways for 8 months. Okay. Sideways for 8 months. All right. So bear with me for a minute. Okay. So sideways for 8 months, not trending at all, not really moving in any direction. If we have a look at the weekly chart, the weekly chart is what? The weekly chart had a big run up, had a big pullback. We went sideways for a while, and now we're breaking back up. We're breaking back above resistance here. So the next level looks like it's going to run to is the 46, 48 level up here. It's broken that there. We have a pretty free and clear run to up there. If I go to the daily chart now and look at this, what is this? Firstly, we came down and we created a significant higher low. Then it ran up, had a little bit of a pullback, and then it jumped up big time with a gap here. What is this here right now? And it's gapped out and above this resistance level through here. What does that mean? That means a few things. Firstly, that's likely to be a breakaway gap. A breakaway gap simply means it's the start of the next directional move. If we get a sideways phase like this, and then we get a bit of a gap up and a big run, and we get a big volume spike behind it, that is now likely to be a breakaway gap. It doesn't mean it's going to go straight up, but it might go sideways for a while. But that tells me now this has a very high probability of being on the next directional move, which means next price move. So we've done all this here. Now we're breaking up. I would say over the next few months we're likely to get up to 47. Or maybe even shorter than that. I don't know. So that's what's happening right now. And so the sideways phase, and then a small little pullback through here, and then the gap up, right? And then this small little pullback through here, and then this gap up and a big up bar through here with a massive volume spike with all, you see all these small little bars. Look at all these small little bars, small volume. Gap up, nice big breakaway bar, big volume. A breaking above all this sideways phase tells me this is now likely to be a breakaway gap, and we're now likely to start an actual directional move. Instead of stuck in this sideways phase we're now likely to start the next directional phase. And the first target would be at least closing this gap up here at 42, maybe a bit higher. But I ultimately see Twitter up at 47. So, but not straight away. It may go sideways for a while, or it may just go straight up there, 2 or 3 or 4 days, bam, 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 all the way up there. So, and again, it's just learning how to read the charts. Sideways phase, nothing happening, no one in control. Then suddenly a breakaway and then a run up. What does that mean? It now means with a big volume spike, it now means we're now starting the next price move. In that, there's a high probability that's likely to happen. Especially this gap here. So I would say 46, 47 is likely to happen. Thanks, Savage. If you check the weekly, it looks like it broke out and heading up to next resistance level. Bernadette. There you go. Spot on. Yeah, and that's exactly what the weekly chart is actually saying there. And look at this weekly chart. Look at all that sideways phase, and then we're slowly building up and then a breakaway bar. So this has a very high probability chance, guys, of getting up to 47. It may take a few months. It may take 1 week. So we'll wait and see. But very, very, very good. I hope you guys can see what I'm saying here about this gap here. Whenever you get that, guys, whenever you get the sideways phase and then you get the gap, I'll give you guys another example of that. Like, for example, let's go back to, say, 6 months worth of view. Let me go back to Apple. All right, same here. Look at this here. So Apple was doing what? Look at this here. What was Apple doing? Pretty much sideways, not much going on, right? Pretty much nothing going on sideways with Apple. We had this resistance up here. Look at this gap. Wasn't even really a strong bar, was it? And then guess what happened with this? Let me put this up through here. So we had a nice move up. We had all these small little candles for sideways for quite some time, actually 1, 2, 3 months sideways, then broke up. And then guess what? Then we started what? We started to rise up from there. So that's what's going on right now. And then obviously we had a little bit of pause and then we pulled back again. But the initial move was what? A move up. So Ray Dalio bashing capitalism. He is I wouldn't say that. X-Wing. No, I wouldn't say that, man. You can learn, remove that. You can learn so much from him. How is someone a crook when we know history doesn't repeat itself, but it rhymes, and he's gone through the last 100 years, the last 100 years of all the crashes, put him into a book and given away for free? How is that a crook? Seriously, man. And yeah, I got a little bit fired up from that because it's like, seriously, man, like, it's like, he's out there really trying to help the smaller person who's not doing well get ahead in life. So of course he's all about capitalism. How do you think his business is about making money? How is that not capitalism? I think you got to really listen to what he says. Um, so just look behind it. It's yeah. He does so much for the public. So Savage said, X-Wing, he said tax people more. That is not capitalism. I think what he's saying is the people who make a few $billion a year or a few $1,000,000 a year. I think that's what he's saying with that. If he is saying that, I don't think he's saying the bottom 60% tax them more. That is difference. All right, it's the top ones. So Savage said, I agree, it's a breakout, no doubt. So the gap up is not a being concern. No, because it's likely to be a breakaway gap on Twitter. And if you really think about it, what is like this whole thing here really is just time, which means fuel, not really going in any direction. And then suddenly we get the breakout. So once again, looking at this here, sideways for a long, long time, then started to build a lot of strength through here. So over the last 3 months, we're getting a nice move up, and we had a nice pullback here. Look at all this pullback here with small bars, and then a breakaway bar. So, I may or may not have traded this one, by the way, guys. I'll leave that up to you to figure it out. Ding dong. I stand corrected. But feel free to stick your. Oh, it's just yeah. So a nice trend up for a couple of months. Look at all these small little bars. Pretty much nothing, even for the last 1, 2, 3. Like if you're looking at time, right? If you're looking at the fuel, even though we had a little bit here, Savage, can you see really the small bars really started back in February, right? So actually, maybe even back here, over here. So this pretty much whole time has been small bars. Did you see that, Savage? Right, all these pretty much small candles. There's only maybe 1 or 2 big candles in there, maybe 3, but pretty much just sideways. Pretty much sideways for 1, 2, 3, almost 3.5, 4 months. So this is really the fuel here. If you're looking at fuel, because it's really not going anywhere. We're not getting strong bars moving in direction. And now we're getting the breakout. Thank you, John. I was also concerned about the gap up on Twitter today, but now it's clear. Yeah, well, it's likely to be a breakaway gap. Because the thing is, guys, is that because it's been going sideways for quite some time with low volume, and then we get a gap up and then a continuation run with a volume spike. This massive volume spike is telling us it's now likely to be the start of the next price move, which is the next directional move. So this has a very good chance. So once again, guys, I may or may not have traded this one. I'll leave that up to you to figure it out. But very good to me. Yeah, I'm not going to go there. I'm not giving any recommendations here, guys. I'm not telling you to trade or sell anything here right now. If you do get into position, you must understand that you must be happy with the risk with every single trade as well too, okay? Always be doing that. Yeah, she spotted on about that weekly too. Yeah. Oh, she was spot on about the weekly too. Yeah. Oh, the weekly is definitely, because if you look at the weekly overall, what has the weekly been doing overall? If you look at the weekly, let me take everything off the screen here. Weekly's been trending up, right? So we had a big move up and then a move down. And then we went sideways for a while and now we're breaking back up again. So, you know what? Actually, let's do this here. I'm going to do some analysis here while Let me bring up this one here. Let's go to the weekly chart. Interesting. Yeah. Oh, let's go back to this one here. So yeah, so that's basically what's happening there. So Twitter's on the move and looks good to me. Again, I'm not giving you any recommendations here at all, guys. Okay, guys. If you get into a position at all, you must understand that that particular trade could be a losing trade. Whenever I get into a trade, guys, I'm never emotional about it. All right. That's one of the biggest keys to successful trading. I am never, ever, ever emotional about my trading. Why? Because I'm trading the amount that if it is a losing trade, I don't care. Because I know most of the trades I take is going to be a profitable trade. Take the loss, move on. I'm going to say that again. I don't ever get emotional about any particular trade I'm in because I trade an amount that if I do have a losing trade, if it is a losing trade, I don't care. I get out of it quickly. I don't hold on. I get out of it quickly. I take the loss and I say next, please. Because I know the next trade is probably going to give me twice as much or maybe even 3 times as much profit than I did on that losing trade. I don't really care. I'm just like, okay, fantastic. Now I'm out. Fantastic. Now I'm out. Fantastic. Now I'm moving on. That's so crucial, important. Most people trying to make money on every single trade. They're loading up too much money every single trade. They're so emotional about that one particular trade, and that's destroying their trading career. But if you just have a take it or leave it, like I used to be like that. And because I like to trade the daily chart a lot, I used to have not a sleep at night factor type thing. Now I sleep like a baby at night times. Like I don't really care because I know that if this is a losing trade, I'm just like, oh, okay, cool. I didn't get hurt. But if it's a profitable trade, fantastic. Right? So say, for example, guys, if I traded, say, 10% of my trading account on any given one trade, and I wake up and I'm trading in the money options, I'm given a fair bit of time as well too. So if the market does go against me, I'm 30% loss, maybe a 40% loss. 40% loss is quite a big loss, especially in the money options. So call it a 30% loss. That means my account is down 3, maybe 4%. Cool. But if the trade works out for me, my account could be up 10 to 15%. Happy days. And especially when you start to trade, and especially when you start to trade intraday, where I'll actually share this with you here, where you can start to capitalize on moves like this. Happy days. This was actually the QCOM intraday trade. In for $1, out for $7. Well, actually, no, that's not correct. I didn't capitalize a whole lot, but even half that is like 300% return, 400% return in about half an hour. This is an hourly chart, by the way, guys. 1 hour chart. If I getting into this here, I know that if it's a losing trade, I'm going to be out really, really quickly, probably with a small loss, maybe 30, 40% loss. And then the thing took off. The options exploded. I got out. Thank you very much. I don't really care, guys. You got to stop caring about your positions. You got to stop caring whether it's going to be a profit or trade or not. You have to give not give a shit factor, and not be so tied to that one particular trade because that's destroying your trading career long term. Because it's stopping you from getting into trades that meet the rules because you're trying to be right. And you guys have been there before, right? You see a really good quality setup and you go to get into it and you don't because you think it's going to be a losing trade and that thing runs off a profit. Like, why the hell did I have to get into that? Because you're trying to be right with the market. I have no idea which trade is going to be a profitable trade, which trade is going to take off like a rocket, which trade is going to do nothing for a week. I don't know. I don't really care. My job is just to trade the market. And then from that process, I actually spelled that wrong, didn't I? Let me do this here, guys. Free trail. Oh, there you go. I can go from the current side now. There you go. That's better now, isn't it? You don't have to spell. You don't have to learn how to spell, guys. So guys, that's your biggest key, right? That's your biggest key. Is like, I don't really care about whether this one trade is a profitable trade or a losing trade, because I know over the next 12 months, I'm going to crush it in the markets. And that's all that matters. And all I have to do is step up every day, have good risk management. So if it is a losing trade, I understand that this is a risk, and I'm like, cool. Next, please. Next, please. Next, please. Next, please. Next, please. Next, please. Oh, there was a 30% loss. Oh, there was an 80% profit. Oh, there was a 25% loss. Oh, there was a 50% profit. Oh, there was a 100% profit. Oh, there was a 160% profit. Oh, there was a 30% loss. Who cares? Winner, winner, chicken dinner. I don't really care about any individual trade, guys. That is the most important part to trading. Don't care about any single given one trade. I'm in, and if it's going against me within a couple of days, I'm out of that thing fast, cutting my losses short and moving on to something that's going to move for me. Thank you. And because I had good risk management, I kept my losses small. And the beauty of trading in the money options, if it does go against you and you're still giving it a significant amount of time, say 30 to 60 days, or at least say 3 weeks, three weeks to 3 to 8 weeks period, and you're giving it that, and it does go against you, well, guess what? You can get out with a small loss, and whatever. But if it runs on for you, then you can make a nice profit. So even if you, and that's one thing I love about options, even if you're 50-50 right, and by trading the right option, 50% of them ran on for a 50 to 100% profit, and the other 50 of them went on for a 15 to 30% loss. You're a winner. Winner, winner, chicken dinner. I don't care about any single given one trade. I really don't. It's not a give a shit factor, guys. That's what it's all about. John, can you check out dra.un.to? I know you didn't trade it because it's not optional. dra. So what about this one, Frank? What about this one? Let's check out that weekly chart. Okay, so we've got, this is the ultimate high point up here. And then obviously that's that point through there. Let's go back to that daily chart now. You know what? This probably has a good chance of getting up to $8 here, Frank. Just by looking at this setup here, this probably has a good chance of getting up to the $8 mark. So it may even happen in one day. Got a nice volume spike out of it. It's coming out of a sideways period. So yeah, it looks like it might get to the $8 mark. That'll be, if I was in something like this, that'll be my target for that. So, alrighty, guys. Well, that's it for me today. Have an amazing day today, guys. Please, guys, at the end of the day, have a good trading setup. Trade a good risk management. Stop putting too much money on per trade that's trying to make you right with the markets. Understand you're going to have a losing trade. Don't be surprised when a trade's at a losing trade, because that's just part of the parcel. Stop trading too much of your account. Accept that this trade you could take is it could be a losing trade. And then from that process, guys, you can start to move forward on a nice, even, calm way. Stop trying to pick and right, be wrong. Say, yep, this is the setup. I'm getting in. Well, let's see what happens with this trade. And the next trade to get into another trade. By the way, every single time it meets the rules, I'm getting in. Meet the rules, I'm getting in. Meet the rules. Because I guarantee you, when you start to pick and choose, you can take a 70% win-loss trading system and turn that into a 70% loss trading system just by you trying to pick and choose and all that sort of stuff. And it all comes back down to you trading too much money. You have to, again, guys, Stop caring about whether this one particular trade is a winner or a loser. Who cares? If you take 20 of these trades, that's the thing that's the thing that really matters. So, all right, guys, thanks a lot, and I'll speak to you guys next time.